Good day, everybody. Here we will be analyzing Euro AUD, starting from the monthly time frame. As you can see, our current month is bearish. Our current month is trading bearish, so we're going to drop down to the weekly time frame also to check if the current week is also bearish. Yes, our current month is also bearish. Our current week, sorry about that. Our current week is also bearish. Now, after we see that our current week is bearish, we are gonna go to our previous day. So this analysis was done on Tuesday, so meaning the previous day is Monday. So we're going to mark the open of the previous day, which is equilibrium line number 1, and we're gonna mark the open of the current day, which is equilibrium number 2. Okay, there we are marking our equilibrium lines. From there, we're going to be dropping down to exactly the 2-hour time frame to look for a fresh supply between EQ1 and EQ2, right? So according to the laws of location, between EQ1 and EQ2, that's where you're supposed to find your continuation patterns, meaning you're supposed to find either a drop-based drop or a rally-based rally structure. So anything between the open and the high of either the daily, the weekly, or the monthly time frame, that is required to be a reversal zone location. So meaning if we find a fresh supply above the opening of either the daily, the weekly, or the monthly, maybe for example between the open and the high, we are supposed to find a rally based drop, meaning it is located at the right area. For bearish scenario, we're going to look for a drop based rally between the open and the low. Okay, so here we identified a fresh drop based drop on the 1-hour time frame. So we're going to drop down to lower time frames to refine it, to actually check if on other time frames the zone is fresh or not. Okay, here at a bit of a problem. Yeah, my Wi-Fi was putting up, so I had to switch to another Wi-Fi connection. Yes, there I was saying I'm sorry for that. So now let's continue. So now the 15-minute time frame is the last time frame that we check when we're looking for our first supply. So we saw that from the 1 hour dropping down to the 45 to the 30-minute and also the 15-minute, we didn't find any valid or I should rather say a fresh supply. So now we're going to look above EQ1. So that's where we expect to find what our rally base drop. All right. So now here I was highlighting that after price closed below that zone, it reversed and it actually tested it. Starting from the 15-minute, I'm showing you where it broke the zone that it created, then it tested it right after it created it. So thus it's gonna make it invalid. So yes, I'm showing that on the 30-minute time frame. So yes, we can now clear everything and let's check above EQ1. So now on the 30-minute, we can see a fresh rally base drop up there, right where I'm highlighting it. So we are seeing a fresh rally based drop, right? You see, even on the 15-minute, it's a fresh supply that has been created and price has never tested it. Going to the 45-minute time frame, same story. Going to the 1 hour time frame, fresh supply, price has never tested it. To the 2 hour and also the 3 hour and also the 4 hour. Yes, that's where we actually found our zone, right? So now you will decide according to your desired risk whether you wanna risk based off the 4-hour supply, the 3-hour supply, the 2-hour supply, the 1 hour supply, 45-minute supply, 30-minute supply, or the 15-minute supply. So it's according to you how you wanna risk. It's also gonna depend on your account sizes and what's not. So yes, now I think that was it for the alignment strategy. So after this, I'll be showing you another form or another method of which you could have analyzed the current price that is happening right now. So I'll be showing you confluence using two different methods, but then it's leading to the same conclusion. And oh yeah, I think I used the long position by mistake, but then yeah, I was trying to indicate that you can take cells from there. and TP as stop loss, entry point, yeah, and so forth. So now you have your setup and you're ready to place your sell limits. And note that always since like this type of way we're trading, or the kind of way we come up with setups, we aim to be precise, meaning we're looking for sniper entries. So you need to like at least put your entry point 2 to 3 pips below your entry line if it's for supply, and 2 to 3 pips above your entry line if you have a demand zone. And also same applies to the stop loss. Also adjust your stop loss 2 to 3 pips above or 2 to 3 pips below, because we're using different brokers, so sometimes you can experience different market conditions. So yeah, now I'm gonna show you a different way whereby you could have approached this without using the IOF, the monthly, the weekly, and the previous day. So what we normally do, you must check where current price is currently reacting from, right? So from what I've seen, price is currently reacting from a drop-based drop, right? A fresh drop-based drop on the 4-hour time frame. That's where the current price is coming from, right? So now understanding order flow, if price is coming off a supply, so we would want to take the next trade on the supply that it created after it reacted to the supply that it reacted to. So now we can clearly see that price is reaching from the 4-hour supply. So we want to see what happened once price reacted there, and see if there isn't any fresh supply that we can trade from. So now I think you guys can clearly see that we have that 4-hour supply over right there, of which it's a fresh zone that price created after it reacted to that 4-hour supply. So meaning would be looking to take sell positions once price retraces back to that supply zone. So for those who are using SMC concept, this is known as SMS, which is a shift in market structure, and it must be followed by a break of structure. Then price must return to the order block, hence I wrote RTO, return to order block. So yes, that's how it is. That's how it goes. Sorry about that. There we go. Our break of structure. And there you have it. Simple. as ABC. Simple as ABC, guys. That's how you got the setup. That's how we analyze. So basically, I just showed you how I analyze on a day-to-day basis. That's how I analyze. So nothing more, nothing less. It's just that like there are extra things that I could have added, but for the sake of the video, I didn't want the video to be long. So I just use basic simple concept that everyone can understand. And yes, that is it from me. That's MLKFX, the Home and Art of Institutional Order Flow and Supply and Demand. I thank you.